Unit 3, Automated Teller Machines, ATMs. ATM Automated Teller Machine, introduced in 1960. First ATM was installed in London by Barclays Bank in 1967. First ATM was introduced by HSBC Bank in 1987. Cirrus, largest ATM network, acquired by MasterCard in 1988. Visa joined with Plus ATM network in 1986. Plus is also known as Visa Plus or the Plus system. ATM are of four types. 1. On-site ATM, within branch premises. 2. Off-site ATM, locations other than branch premises. 3. Worksite ATM, located within the premises of any institution. 4. Mobile ATM, on move and are not fixed in a particular location. SFMS, Structured Financial Messaging System. IDRBT, Institute of Development and Research and Banking Technology. RBI in 2013 gave license to non-banking entities to set up white-label ATMs. Non-banking entities with 100 crores can apply for setting up white-label ATMs. Tata Communications Payment Solutions Ltd., TCPSL, was first company to obtain RBI's permission to set up white-label ATMs. White-label ATMs, ATMs which do not have any branding or bank logo. These are set up by non-banking entities. In case of white-label ATM, the settlement, etc., are with the sponsor bank, and dispute resolution is with the card-issuing bank. Brown label ATMs. Third party owns and operates the ATM machine, whereas network connectivity and cash management is responsibility of sponsor bank. Brown label ATM would be under the brand and logo of the sponsor bank. Swadhan, launched in 1997. Initiative in the field of shared payment network, launched by IBA for its member banks to share their ATM. Swadhan was dismantled in 2003. SFMS is built on the lines of SWIFT and CAN for secure communication within bank and between bank. ATMs are connected to switch using VSAT or leased line. ATMs can also be connected using MPLS, multi-protocol label switching, based routing. Till 2009, banks were connected to IDRBT managed network for interbank ATM transaction. Since 2010, same was handed over to NPCI to operate. Transaction on ATMs could be 1. On US. Interbank transaction where card issuer bank and ATM owner acquiring bank are the same. 2. Off US. Interbank transaction where card issuer bank and ATM owner acquiring bank are different. Instant money transfer, IMT, allows bank customer to transfer money by inputting beneficiary, receiver's mobile number, and secret code generated during transaction. ATM. In Metro City. Max 5 times month free usage at own banks. Max 3 times a month free usage at other banks. Rupees 20 per transaction after free usage limit. In non-metro city, no limit on at own banks. Max 5 times a month free usage at other banks. Rupees 20 per transaction after free usage limit. Issuing bank pay interchange to acquiring bank at the rate of Rupees 15 for every financial transaction and at the rate of Rupees 5 for every non-financial transaction. As per RBI, wrongful debit, in case of ATM transaction, is to be settled within 7 days of account holder complaint or else pay commission of Rupees 100 from 8th day of the complaint. 2 major disputes in case of ATM transaction. 1. Customer account is credited, but cash not dispensed by ATM. Chargeback credit adjustment cycle. 2. ATM dispensed amount to customer but funds not settled. Debit adjustment cycle. It is mandatory for the customer to file a complaint with its issuing bank within 30 days of the failed ATM transaction. Business decline. Refusal of transaction by system due to wrongful customer behavior. Example. Entering a wrong PIN in ATM, invalid account, insufficient funds, exceeds withdrawal limit, etc. Technical decline. Refusal based on hardware or software or application or communication over entire flow of transaction. There are various types of disputes. A dispute can rise for a successful or unsuccessful transaction. The 4 stages of dispute resolution mechanism are: Stage 1, chargeback. When cardholder contacts the card issuer and refuses to accept a charge appearing on a monthly billing statement. A cardholder has 90 days to initiate a chargeback. Stage 2, representment. Acquirer produces the supporting documents to NPCI to prove that the transaction was successful. DMS, Dispute Management System. A software developed by NPCI will debit the issuer and credit the acquirer for the amount of represented transaction. Stage 3, pre-arbitration. If dispute is still not settled, then the next stage is pre-arbitration dispute resolution through the DMS online system. Pre-arbitration must be raised within 30 days of representment. Acquirer has to respond within 17 days. Stage 4, arbitration by manual process. After pre-arbitration, time frame for referring dispute to arbitration by manual process is 30 days.